Did you watch the federal budget 2020? Do you know your financial benefits in it, how to take advantage of the budget and what to avoid? This is exactly what I want to help you with today, my review of the budget for pre and post retirement planning. I will cover areas of taxation, superannuation, social security and aged care. My name is Katherine from About Retirement, and my goal is to help you build your financial security and prosperity for your retirement with smart financial strategies, tips and ideas. So let's start with taxation. This budget is all about bringing forward measures already approved and legislated originally to commence on 1st July 2022. And personal income tax reduction is one of those changes and will be applied retrospectively from 1st July 2020. If you are on 19% marginal tax rate, you will be happy to know that the threshold of upper limit has been extended from $37,000 up to $45,000, which is great news for your disposable income. But unfortunately, some people will miss out on low-income superannuation tax offset. So if you don't know what it is and whether that applies to you, please listen on as I will explain this feature when I will be talking about budget and superannuation. If you are on 32.5 tax bracket, you will also benefit as this has been also extended from $90,000 up to $120,000. So the total maximum tax saving available is actually for the income of $120,000. That amounts to $2,430 or approximately $50 a week and does not increase any further above that income level. So here we go, more disposable income due to tax cuts. Well, my recommendation is try to save this extra money if you can. If you are okay on your current budget, this is the money you haven't had before, so you won't miss it. But with time, if you invest it, it will grow to significant savings balance for you. So you could, for example, salary sacrifice. If you don't know benefits of salary sacrifice, have a look at my video. Maybe you can make a spouse contribution or maybe non-concessional contribution or maybe even saving outside of superannuation. It does all depend on your personal situation, but regardless, you have this ability to save extra money now. Stage 3 of tax cuts has already also been legislated to be introduced on 1st July 2024. And if going ahead, we will have only 3 tax rates, 19, 30 and 45%. The 37% tax rate will be completely gone. And I suppose it's a good news because 95% of taxpayers will pay at the maximum tax rate of 30%. The government is also bringing forward the increase of low-income tax offset. Currently at $445, it is being increased to $700 in the current financial year rather than in 2022 as originally planned. Low and middle income tax offset is unchanged for this financial year. It was supposed to be phased out because recommended tax cuts were supposed to replace it, but the government decided to keep it for this financial year. If you want to see the tax relief benefits for your income level, go ahead and check out the government estimator on government website budget.gov.au. I actually did go to that site. I put my figures and just a little warning. Please be aware that it actually shows your tax savings by comparing with the tax system from 2017-18 financial year. That's the time when Scott Morrison first started as Prime Minister and he introduced stage 1 of his tax cuts. So by comparing your current figures with the tax system from 3 years ago, obviously the figures look much better. So what's the verdict about budget and tax changes? Well, first of all, tax cuts are a great initiative for 95% of Australians. Will benefit from it. We will have less complexity in our tax system. But the negatives are that unfortunately, there is, as usual, not enough tax cuts, support or relief for low-income earners. And this calculator that I've mentioned, I believe, is a little bit misleading, not comparing with current situation. So here it is, my verdict for tax. So how did you find my verdict about tax cuts from the budget? Do you agree? Do you disagree? Please let me know in the comments below this video. And if you enjoyed this video, if you found it informative, please give it a thumbs up and subscribe to my channel so you will be notified of my next video. And also, I would really appreciate your support. So now we're talking about superannuation, my favorite topic. The government is introducing stapled funds. So what are stapled funds? Your super fund will be stapled to you and your employer will be required to contribute to this fund. From 1st July 2022, your employer will be able to access all the information about your super account to which he is supposed to be contributing through the ATO website to avoid any duplication. Super Choice, however, is still the best options. The default funds is there only in a situation for the employer if you actually don't have your current super or if you haven't chosen your own fund. Please make sure that you research super funds and make an informed decision. It very rarely I would ever recommend accepting a default fund as they tend to be generic with not many features that you might actually need and not with a great deal of investment choices. Introduction of stapled funds will allow for reduction of unintended multiple accounts with duplication of fees, insurance, and consequently lost earnings. The government is also introducing a new website, Your Super. Introduction of this new website is designed to introduce more visibility and relative performance of super funds. Every super fund will be required to report the underperformance subject to annual performance test. If the super fund fails in 2 consecutive years, it will not be permitted to accept new members unless the performance has improved. There will be also a new requirement for trustees to act in the best financial interests of members. I don't really know how that has been calculated, but apparently those measures are expected to improve a typical Australian retirement fund by around $60,000 over the life of that fund. This idea is still subject to debate, so let's watch this space. So in relation to your super calculator, the danger is that a lot of people will really need to understand superannuation as an entity and be able to compare like for like. So for example, this calculator is not really comparing fees. It's not taking into account your particular needs, such as insurance, let's say, or any specialist investment that you would like to have. So it's not really a fair comparison, I think. Government has also reconfirmed the previously announced COVID-19 response package, which was a temporary access to superannuation, the 2 payments of $10,000 last financial year and this financial year. Now, please be aware that the window of opportunity to draw any additional money from your super, so the next lot of $10,000 is closing on 31st of December 2020. So this is not until the end of the financial year, but until the end of this calendar year. And the second measure introduced already was temporary 50% reduction to minimum payment drawdowns to account-based pension and market-linked pensions for the last financial year and this financial year. And that's it. Those are the whole benefits, that nothing new has been introduced in this area. So what is the verdict for superannuation changes? Well, on the positive side, there is no messing and fiddling with superannuation, unlike what industry was really worried about. Apparently, there is around $30 billion in expenses that are coming out from all superannuation combined. So any way to reduce those expenses for the benefit of members is obviously a good idea and is beneficial. Introducing trustee responsibility to act for the best financial interest of members is a positive measure. I am just a little stunned that this is not a given part of trustee responsibility, and has to be separately legislated. But hey, maybe I imagine perfect world. I really just hope the trustee will not see this as another excuse to increase their trustee fees in order to implement those measures into superannuation. The sad part is that 80% of Australians are disengaged from their money. Most people don't really budget, they don't check their superannuation, and they don't check fees or charges within their investments or within their super funds. So introduction of this calculator might make people take a little bit more action and be a little bit more engaged. And the same thing applies, the whole idea about stapled super funds was also to make members pay attention to their superannuation savings. I don't disagree with naming and shaming underperforming super funds, as the system is designed to let consumer know if their fund is performing and if it is worth staying with it. But it is taking into account only one consideration, which is performance. As explained before, there are many other factors why a particular super fund might be good for you, and judgment on performance front only is not a fair one. But it will most certainly drive the competition and hopefully create a better outcome for consumers. Now, simplifying the process of superannuation when applying for the job is always a good one, and I suppose stapled super funds might really assist with that. So let's look right now at the negatives. It is very disappointing to see that the planned increase of superannuation guarantee has not been confirmed. Therefore, the current 9.5% that was supposed to be increased to 10% in the next financial year stays without any changes. And this is another huge hit, especially for low-income earners. There is also nothing in the budget to reduce the superannuation gender gap that has been created by wage difference and the time that women take off work in order to look after their families. What's worse, most part-time jobs are filled with women earning up to this new 19% tax threshold income of $45,000. And this is when, as I promised, I need to explain the issue of the low-income superannuation tax offset. So before, the threshold was $37,000, and with that level of income, employer super contributions that were subject to 15% contribution tax were effectively paying higher tax than your income tax rate. In order to fix that issue, the government introduced the low-income superannuation tax offset of up to $500. However, now that the 19% tax rate has been increased to $45,000, all taxpayers with income between $37,000 and $45,000 will effectively pay more tax through superannuation guarantee that they would have otherwise paid in a form of income, because the low income superannuation tax offset stopped at $37,000 as per prior legislation. Considering that we have over 700,000 women that will be affected by that, it is really not adequate. Self-funded retirees and part-funded retirees would be very, very disappointed with this budget because really there is nothing in it for them. So what's the final verdict for super? So right now let's have a look at the budget and changes being introduced within the area of Social Security. This year we've already seen 2 payments of $750. And now there are 2 new payments of $250. The first one to be paid in December 2020. Remember, you have to be eligible on 27 November 2020. And the second lot will be paid in March 2021 with your eligibility based on 26 February 2021. Those payments are exempt from tax, and they also not counted as income for other income support payments. Here is the table of eligibility to receive the 2 payments of $250. If you have a pensioner concession card, but you are not receiving any age pension, that means that you've lost your pension on 1st January 2017 due to changes to the asset test. But please remember that you are still eligible for those 2 payments of $250. By the way, if this is you, feel free to contact me and I will show you exactly how you can get part pension back. The government has also been talking about pension loan scheme. It is designed for asset-rich and income-poor retirees. For example, if you own an expensive home but you don't have any other assets that are income-producing. Even self-funded retirees might be eligible to apply for those loans, and as the loan is secured by your family home. A loan calculator is going to be available and will assess your eligibility and estimate your loan balance. Government is also introducing a scheme to improve digital skills for Australians of the age 50 years or older. And they're looking at improved administration for PBS, pharmaceutical benefit schemes. And another measure is that clients and their children, if they're stuck overseas due to COVID, the government is introducing additional support to bring them home. So what's the verdict for Social Security and age pension? Well, in one statement, it's a huge disappointment. There is nothing in the budget for retirees outside of those 2 payments of $250, considering that 1 in 4 Australian retiree lives in poverty. Most likely this double payment of $250 will have a very marginal impact to improve their lives. What's more disappointing is that there is no reduction to dimming rates. If you are a single pensioner and you have assets, all your assets about $53,000 that are subject to dimming rules, they are deemed at 2.5%. For a couple, that limit is $88,000. Well, try to get that level of return from any bank. It is impossible. The government's explanation on that front is that retirees can invest portion of their money into Aussie shares. But as we know, due to COVID, many companies have reduced their dividends and some have removed them altogether. Therefore, the return may not necessarily be there at all. And also, that is my personal belief, that there should be some level of compensation being taken into consideration by the government about the investment risk that retirees are forced to take in order to get the return that is supposed to be deemed. Here is my verdict for Social Security. So the last topic is aged care. Granny flat exemption for capital gains tax is still in workings, so nothing new to tell you on that front. Government introduced additional home care packages, 23,000 of them, but it's over the period of 4 years. And government wants to improve transparency and standards with COVID supplements to assist residential aged care and home care providers. There is also a Royal Commission underway right now in relation to the aged care system, with more information to come in February 2021. Okay. So what's the verdict for aged care within this budget? Well, 23,000 packages is just simply not enough, but it is, I suppose, better than nothing. But unfortunately, only 2,000 packages are of level 4, which is the highest level, and that's the level that is most needed. There is over 100,000 people on the waiting list, so the demand is really there, so that's just not enough packages for them. If you are not familiar with home care packages, they are designed to keep people at home, assisting them with home living rather than going to aged care facilities. One of the requests to the government was to reduce the wait for the home care packages. According to Ian Henschke from National Seniors, the amount of money required to fix that problem was anywhere between $2 to $2.5 billion. Now, 1.5 was allocated, but it is over the period of 4 years, not 1 year, 4 years, and this is just not good enough. My verdict for changes in aged care. So here it is, my overview of the budget. I really hope it will help you in your retirement planning. And if you need any help, any assistance, feel free to contact me. All the contact details are listed in the description below the video. If you would like to find out a little bit more about superannuation, have a look at this video. It will introduce basics of superannuation system in Australia. And the second video is about salary sacrifice. It's really worth listening because salary sacrifice is one of the best ways of saving for your retirement. Thank you very much again for listening to me. Enjoy your day, and I will talk to you next time. Bye for now.